All right, good morning, trade pros. Welcome to our morning market update for Monday, June the 3rd of 2019. Hope you had a phenomenal weekend with you and your family. It's a new week, it's a new day, and most importantly, it's a new month. A fresh opportunity for the trading book to get in here and make some money. There's going to be a ton of opportunity in today's session. We do expect to see a little bit of volatility come in for a Monday, more volatility than typical. And let's start our morning market update. We got a pretty busy one for you. All right, morning market fun fact. About $10.3 billion flowed out of global equities, and that's a huge amount, all right, just in the last week, all right, bringing the year-to-date outflows to a total of $140 billion, 145. So you got to think about this. As equities have made a new all-time high, institutional money was selling out of their positions to the tune of 145 billion so far. In the same time period, 6.9 billion last week, 6.9 billion flowed into the bond funds, bringing the 2019 inflows to 165. Or said differently, more than all the money that came out of equities has gone into bonds. How can that be? Cash and selling of other instruments as well, and they're going to bonds, which shows you their hand in that they're expecting to see some downside. They're seeking safe haven status. They're looking for safety. They're not buying this rally at the moment, and they're nervous. All right, that's a very important message to learn from institutional money. On the latest with the trade war with China, the Chinese government released a white paper citing and stating the following: Washington's accelerating trade war with Beijing has not made America great again. It has instead done serious harm to the U.S. economy. Unreasonable demands led to the collapse of trade talks in May. That's what this China white paper said. All right. It also claimed the U.S. was an untrustworthy negotiator, and that any further discussions need to be based on sincerity, mutual respect, and equality. Of course, they're going to say that. Nobody's going to know what really happened unless we're sitting at that table. All we know is that there wasn't an agreement. And because there wasn't an agreement, now the trade wars are escalating once again. All right. China said they don't want a trade war with the U.S., but won't shy away from one. And according to Vice Commerce Minister Wang Shuwen, said the strategy of maximum pressure and escalation don't force concessions. So that was an interesting thing to say, because just last week on Friday, we found out China was willing to at least pick up the discussions again in this G20 meeting coming up at the end of June. And they pretty much reversed that sentiment over the weekend, and it helped push the market lower. All right, that's not a good update. Speaking of not a good update, here's another one for Boeing. The 737 MAX issues continue to get worse. Get this. A new problem involving Boeing's grounded 737 MAX fleet has been discovered, and also it's impacting prior versions of the 737 model that's more reliable, that's been more of a staple to their portfolio. The plane's been around for a very long time, it's been in service, and has a great service record. All right. It's improperly manufactured wing slat tracks, which is what's responsible for the wings. You know how they open up to provide more drag, more aerodynamic pressure. Well, so it's with that construction. Now, it's not enough to cause any kind of accidents. However, the FAA has given Boeing 10 days to fix these problems. All right, just 10 days. And so again, that's more costs, more planes out of service, more schedule conflicts for airlines, more potential liability if airlines deem it necessary. All right. They're losing, the airlines are at the end of the day the ones that are going to lose the revenue, and it comes at a huge cost. Azerbaijan airline, AZAL, has also canceled a $1 billion contract to buy 10 737 MAX jets on the grounds, and this is in quotation marks, that it's due to safety reasons. They do not want the aircraft. So that's not going to help Boeing. And Boeing is a big company of the Dow Jones. It's one of the big 30 companies. Watch out for some Dow weakness this morning if Boeing opens to the downside. All right. Another company that's had a little bit of a struggle over the weekend is Google. I think I broke the internet, and I'll tell you how in just a second. The Department of Justice declares war on Silicon Valley tech giant Google, saying, hey, there's some antitrust lawsuits that we're going to look into here. And on top of that, the Google Cloud completely collapsed yesterday, seemingly as soon as I clicked the go live button. So on Friday, we tried to do this live session where we had a chance to answer your questions. Didn't work. All right, Sunday, we scheduled it for 4 p.m., send out all these reminders. Everybody was there. I click go live, Google crashes. Not just my Google, not just my computer, worldwide. All right, there was issues in the United States, Europe. servers in the eastern side of the coast were completely out. Instagram was down, Vimeo was down, Facebook had issues, and any other platform that relies on Google Cloud, which we've discovered are a lot. All right, a surprisingly large piece of the internet went blackout on Sunday yesterday, along with Google. So that was interesting. So it's down 3% in pre-market trading. Obviously, that's a lot of bad news stacking up on the shoulders of a tech giant. In today's markets, Japan's down 1%, Hong Kong's flat, China's down 0.3. In Europe at midday, London's down 0.4%, Paris is down 0.1%, Frankfurt's down 0.2%. In the United States, Dow's down 0.6%, S&P's down 0.7%, Nasdaq's down 0.8%. Crude oil is up 1 percentage point to 54.01. And now trading, because I know the open just came out, 54.49, a little bit of a bid on crude oil, up below the previous day's close of 53.38, and up over $2.10 from the $52.11 low on the Globex open last night. All right, so pretty big bid building up in crude. But like we said here in yesterday's Market Analysis Live report, which is a weekly webinar we do with all of our membership level members, it's time for a bit of a pullback. Crude's seen a lot of selling. We're going to see a pullback. Watch how the volumes carry this thing. If they're weak volumes, there's an opportunity to sell again. All right, gold's up 0.7% to 1320.60. Now back down to 1319. It hit 2330 as an overnight high on gold prices. All right, Bitcoin's down 2.2% to $8,512. Get this is mind-boggling for me. Ledger X, which is a company out of New York that provides a derivatives marketplace for Bitcoin. So you can trade options on Bitcoin. A trader yesterday, or rather on Friday, I believe, let me see the date, over the weekend. So it doesn't specify a date. You could look it up though. All these transactions are public. Bought 30 June 2020 $50,000 call options. I kid you not. Paying a total of $4,500 premium, which means that if Bitcoin doesn't close at 50,000 by the end of next June, the person loses their whole premium, which is only $4,500. But it reminded me of another transaction that pretty much marked the very top of the Bitcoin surge in December of 2017. A trader bought $1 million worth of call options that expired for 50,000 at the end of December when Bitcoin was less than 20. All right, so I guess somebody calculated at this pace of increase should be above 50,000, and they bet big and lost all $1 million of it within days. All right, so while it's showing an interest, institutional money doesn't play with out of the money options to that scale, and so we're starting to see some behavior once again of getting a little bit too greedy. We were looking at the 8,500 level as resistance. We may see a little bit of a pullback here in the crypto sector. I just think a transaction like that is just, it's excessive. I don't think any professional trader does that. All right, somebody's just trying to roll dice, and when it works, it's great. And more times than not, it doesn't, and it sucks. 50,000 by the end of next June is a call option. Interesting stuff. Today's economic calendar, 9:45, we have PMI manufacturing index, 10 a.m. ISM manufacturing index. Got quite a bit of data today. 10 a.m. also construction spending, so top of the hour will be busy. 1:25, Fed's Bullard speaking on U.S. monetary and economic policy. Expect to see some action there. And then 9:25 tonight, Fed's daily is speaking. Two big updates for you, and then we'll leave it for the day. We'll turn around and open up the trading room. First and foremost, this is my last opportunity to tell you this. Tomorrow morning when you wake up, I won't ever talk about this again because it's over. Prices are increasing today at midnight. They're going up. We've added so much value that even the new prices are going to be too low, but we like to price ourselves at value, right? Our understanding of the market and the way that you guys like to learn is, low monthly payments, so you get value and you learn how to earn fairly quickly rather than shelling out $10, $15, $12, $20,000 for a course that can't teach you anything, because really the real teacher is the market. We've priced ourselves at a value standpoint. However, we've added so much value. We've redone the futures course, redone the foundations course. Think about this. If you buy a course on the DVD set, when do you think it was recorded? Right? It was in 2019. Our two courses, our main ones, have been updated and upgraded for a 2019 marketplace. Most education these days says, hey, look at a head and shoulders pattern, right? The only head and shoulders these days that works is the shampoo. And so we've updated a lot of our products. We've updated a lot of our service. It's fresh, innovative look. We've added a lot of onboarding and kind of one-on-one touch points. So prices are going up. To kind of give you the long or the skinny of it, prices are going up as of midnight. This is your last chance to lock in this price for good, forever. It's the lowest you're ever going to pay, and it's up to you. It still comes with a 14-day guarantee, so if you want to check it out, literally risk-free. If you don't, that's fine. All right. Everyone is ready for things at their own time. Marky's doing an update at noon, right? Have you set it up yet? All right, Mark's doing an update at noon to answer all your questions. I'll be there as well. And the third time is definitely a charm. Unless Google Cloud collapses again, I think we're on for this one. Third time's a charm. We tried it Friday, tried it Sunday. Not my fault I crashed the internet. I'm just that powerful. What can I tell you? Larry Page called me and said, hey, tell me next time before you go live. There's too many people watching. And yeah, so today at noon, watch out. We're going to put a link in the description below. Or if you have your notifications on, you're going to see that on YouTube. So we'll see you guys today at 12, answer your questions. And it's a huge opportunity in front of all of you. I hope you take us up on it, and we'll see you in the trading room. Have yourself a great day. I'll see you tomorrow. Trade well, and trade like a trade pro. Goodbye. All right, trade pros in the room. Let's get in here and make some money today. I see a lot of exciting opportunity in equities and in commodity markets. Let me start it out by doing the S&P 500 levels, and then I'll pass it off to Victoria, talk about the NASDAQ, Mark to do the Dow, and finally, Stephen to do oil. All right, oil's had quite a bit of a run up this morning. Will it continue? Will be the big question for Mr. Box. So let's get started. I'll kick it off with S&P and give you some high probability, low risk areas for trade opportunities.